Hi, I'm Jeffrey Roach, Chief Economist for LPL Financial. In this Econ Market Minute, I'll give you 3 highlights of the past week and 3 potential market movers for the week ahead. Let's start with 3 highlights from this past week. First, minutes from the May 6th Fed meeting reveal that 50 basis point hikes are likely in the upcoming meetings. Straight from the minutes, the Fed gave 3 reasons that inflation could ease in the medium term: easing supply bottlenecks, growing labor force, and waning effects of stimulus. Right now, we already see 2 of the 3 reasons playing out. We are still waiting to see a growing labor market as workers re-enter the workforce. Second, new home sales in April plummeted over 16% from March as higher borrowing rates put a squeeze on buyers. The decline was the largest one-month decline since 2013. But before we say the sky is falling, note that sales are now roughly at pre-pandemic norms. The southern region declined the most as post-pandemic relocations are slowing. Rising median prices are putting acute pressure on first-time buyers who come with no pre-existing home equity. The softening housing market will drag on overall economic growth this quarter. Third, overall inflation rate is cooling, but a lot more to go. Savings rate falls as inflation takes a bite. The core PCE deflator fell to 4.9% in April. Unlike the CPI metric, deflators capture substitution effects as relative prices change and are considered a better measure of inflation. The savings rate fell in April, and a falling savings rate tells me that consumers are dipping into savings to offset a subpar wage growth unable to keep up with inflation. We also know that credit card usage rebounded in recent months, partially driving the consumer spending engine. Real spending rose 0.7% from a month ago, showing a relatively solid consumer able to withstand tightening monetary conditions. On net, this is a decent report for Fed policymakers. Now 3 potential market movers as we preview the week ahead. First, on Tuesday, the Consumer Conference Board publishes consumer confidence for May. Look at both regional and income disparities, since upper income consumers are providing a lift to the current economic environment. Second, investors need to again start watching those weekly initial unemployment claims. In recent weeks, an increasing number of individuals are applying for unemployment benefits. This is a leading indicator of labor trends, so watch closely as this indicator is likely at an inflection point. Third, and possibly the biggest release for the week, we get the comprehensive jobs report for May on Friday morning. Especially look at employment activity in construction as it relates to home builders, and employment activity in the retail space as stores manage rising capital and labor costs. Finally, take note of wage growth during this unusual time of slowing growth and persistent inflation. See you next time for more economic insights for your week.